Okay, Vahid, we are live. Okay, welcome everybody to Wall Street Reporter's next Super Stock, a live stream for February 4th, 2021. We have back with us an exciting company, Victory Square Technologies. Vahid Shababi, the Chief Growth Officer. Vahid, welcome.
Hi, Jack. Thanks for having us again, and hi to everyone who's watching this interview.
Vahid, so you're in Vancouver, but you have this very California type of title, Chief Growth Officer, not like normal like CEO, CO, Chief Growth. So you're very Silicon Valley.
Well, being in Vancouver, somehow we have to do something about our weather to be close to California. So that was the closest thing that I found.
Excellent, excellent. So, Vi, this is the first. So we had last week. We had your CEO, right? We had Shafin, and we're going to have you on today. You're going to talk about some of the details. For anybody that's just tuning in for the first time, our goal with this live stream is to bring you those stocks which have that 10x to 100x upside. So these are companies going after multi-billion-dollar market opportunities. They're at a key inflection point. They have multiple catalysts in place, and they have a management team that gets it when it comes to creating and maximizing shareholder value. I think you're going to agree that Victory Square definitely has those qualities, but don't take my word for it. Listen to the interview, ask Vahid your questions, and then decide for yourself if Victory Square is going to be that next super stock, that next 10-bagger or 100-bagger. So Vahid, what first I want to ask you, what is this chart behind you? I just noticed this. What is going on there?
Yeah, so the chart behind us is different portfolio companies that VS has a stake in them with a percentage of our ownership, and that's pretty much our model to find the right companies in the right industries at the right time. And working on all that, not only investing but also working with them very hands-on to be ready for the wave that is coming in those industries, to give the maximum potential to our shareholders. So as of today, we have 23 portfolio companies that we have ownership anywhere between 5-10% to 100%, that we work with them very hands-on, mostly on the companies that we have material stake, and working with them and take them through our process. So that's giving, it's not only our shareholders, not only, investing in one company, but they are investing in multiple different companies in the hot sectors to have a, higher chance to basically get that, 10 times, 100 times, and 200 times based on the speed that we
I love this model as a public company. In the microcap space, this is we've talked about this before. I think I've mentioned this kind of off the record, in conversations I've had on our sort of like other live chats with the audience. So basically, I would say it's sort of like you have this kind of like unicorn farm, and multiple shots on goal. You have these like little hatchlings, these little unicorn eggs. And I think all you need is one of them to turn into like a teenage unicorn, not even a full-size unicorn, and that that could be worth $2 a share by itself. I mean, right now your market cap is what, 50 million ballpark?
Yeah, our market cap is about 50 and 60, and again, I like your description. The only difference is like all these baby unicorn was about 1.5, 2 years ago, and we've all worked with them very hands-on, and they're all in the mature stage, as you saw, like Fans Unite. We spun out.
Fans is not even. It's not even mature yet. It's still teenage. It's like a young. It's not. Yeah. It's
has a good product. Has good capital. In hand to do what they need to do. Now we also have a lineup of the few other companies that they're all gonna go out in next few quarters. Game On V2 Games, the next one that we're pushing it for Q1. Immersive is. We're pushing it for Q1, Q2, and we've done a lot of planning and a lot of expansion in digital health, which we'll talk about it more today. But you're absolutely right about that. And again, this is not only in one industry: AR, VR, health tech, gaming, cybersecurity. These are different things that we feel we're going to see a massive growth in next few quarters and years.
Okay, what I want to do is, because look, I think what we're going to do is over the coming weeks is we're going to be talking about some of your different portfolio companies. We're going to be kind of diving in, and that's kind of what I like about what you're doing, is that there's always something new to talk about. You have so many different facets to this. And what I want to kind of focus on today is just one of them, which is the digital health. The digital health space that you're in. You just announced today this acquisition. So can you talk about kind of like the Victory Squares, the kind of your digital health assets?
Absolutely. So for the digital health, we 17. We invested in Victory Square Health. Worked with the with a few different individuals. Invested in a company called Personal Biomarkers. Then our vision when we got into that was to having a 360 offering, which is easy to use and affordable, not only for healthcare professionals but also for the consumers as well. Then when the COVID happened, COVID created a lot of opportunities. And what we feel is COVID expedited the fourth revolutions. If 6 months or a year ago, you would have told people that you're going to see your doctors through telehealth, they would have laughed at you. Now, today, there is no other way. And I feel there are some of the changes that happened because of the COVID that will stay with us, because the customer's behavior is going toward what is more comfortable for them to do it. So in early 2020, we acquired a company from Brazil that they were focusing on diagnostic testing, and the way that we look at that company was not have all these diagnostic testing, but also they can bring us users for our digital health, which is VS Digital. Late last year, we had like a full planning on different platforms. And then we started, doing some due diligence. We figured out what we found out is there is no good tech out there for all that. We were planning to white label different techs for different brands that we want to do. And then our team found Hydrate. Hydrate has a few different components for us. Hydrate by itself right now, in last year, they had over $1 million Canadian revenue, and they're on track for 500% growth this year based on January. Okay. Now, that's the company.
This is the company this is the one that you just announced the acquisition of today.
That's the one we announced. So it has two components for us. One, the company by itself, it's a great in the right market. They're having a right offering,
the right space at the right time, no question.
We're gonna help them to grow that. Number two, they have a tech that we can reuse that for other platforms that we're planning, and the licenses that they have. In November, December, we promised our shareholders that we want to have an e-commerce website to be able to start selling the test and medications. We faced with an issue that Shopify or other platform that you cannot sell drugs and they're not HIPAA compliant. So acquiring Hydrate, now we have a full pharmacy online that right now they are actually selling. Not only the test, but also they send people home to do the test. So we already launched our e-commerce with that, and the licenses is not only the tech, but also the licenses, the 503B, that is a pharmacy license, and also having a license to do telemedicine. So the way that we looked at this is it's a great business. We can expand it. Two, we can use this tech by ourselves, and we are planning to have 6 or 7 different divisions in next 60 to 120 days that will be launched. And all that is going to be in different jurisdictions. Now, everyone is focusing in US and Canada. We're starting the same thing in Brazil right now to have the similar business in Brazil by getting the right licenses and all that. So that was the kind of thinking behind the Hydrate, and kind of acquiring Hydrate has changed our planning around the digital health since December. And we have a solid plan for 6 or 7 divisions that I'll be more than happy to share more about that in this interview.
Okay, so I want to back up for just a sec. So I think a very important point. So Hydrate right now, the company basically this is a company that already has traction. Yeah. They did $1 million. They did $1 million in revenue. You said last year.
Million Canadian. Yeah.
Okay, so that's still money, right? $1 million Canadian. Okay, so it's not like this is not vaporware. It's not no. Yeah, the company that has market traction. And you said they're on track. You expect them to do 5x that, so $5 million revenues, 2021.
So based on the projections that we have in our due diligence, the projections is about 5x, and they hit the milestones for January. Now, again, we need to do a more deep dive in this company because we just acquired them, and we're hiring a more team from the revenue perspective that we feel we can't even expand that and go beyond that. But based on the projections that they provided to us, they hit the milestones for December and January, and they're on track for that.
Okay, so yeah, so I think the point is that essentially, the VST, the market cap is, let's call it 60 million even Canadian, right? So it's 60 million, so it's 50 million US roughly, and you have multiple opportunities in there which could be worth substantially more than this is one of them. I mean, this by itself is a company maker essentially. This this thing in itself. I mean, look, there are we know of companies out there that are trading at 20x forward revenues in the digital health space, right?
So that's very interesting because the companies right now, they're comparable right now. They're looking at two things: either they look at the tech or the licenses. So when you look at like Everlywell, like their valuation is 1.3 billion based on 100 million projected revenue. The Roman is 1.5 billion. CloudMD, TruePills. Same thing if you go to MedNow in Canada, that they have like the online pharmacy. So we're going to use this and not only offer to B2B, but also B2C. Now, again, having multiple different portfolio companies underneath, one of our plans in next, again, 60 to 120 days is not only we're going to launch different brands for different audience, and we'll talk about this today, but also we're going to have this tech. We're going to tie our processing company that we already have and start offering tech and processing company for whoever wants to have a white label and start offering telemedicine or the pharmacy online. So we become that white label tech company for them with the combination of the tech and the processing.
Okay, so this is coming up in the coming weeks and months, basically.
So right now, the plan that we have is Hydrate. We're just gonna make sure, like in US, we're gonna expand the team and offerings, and also we're gonna expand the online pharmacy side of it because it's live, it's working. We just need to expand it now. The Hydrate will be expanded to Brazil and Canada, and then based on for the very same offering. After that, the other brands that in the next 60 to 90 days we're gonna launch is we're gonna have one for mental health that is gonna be white label of the Hydrate with the same offering, because the features is telemedicine, we have prescriptions, we have synchronized forms and asynchronized forms, and scheduling, all that, and works with the insurance. So we're gonna white label that for mental health because it's a big issue after the COVID. We're gonna do it for telepets, that we're gonna offering that for the vets as well. Okay. Hospitality, we have another brand called Discreet Care that originally was supposed to be launched in February, March, and we're still on track. The only challenge is right now, we wanted to work with the white label tech. Now we're gonna put it on Hydrate. So there are some adjustment that we're making on that. We're focusing on diseases and lab works that people are too shy to go to the doctors, and they can go through the website. We have.
So Wyatt, I want to. So are these going to be separate companies that are going to be?
They're all going to be under VS Digital Health, owned by VSD.
But essentially these are going to be separate companies essentially.
They're going to be separate brands.
So one of these that you just mentioned, like talk more about this. You said this prescriptions that people are too shy about. Is this like, are you like this? What is it? What is it, like the Roman, the one we see, which is like $1 billion?
Not to Roman, but okay. One big change that we made in VSDH in our planning is we're not focusing on one-time revenue on VSDH anymore. All the one-time revenue is going to go to the Victory Square Health for selling tests or anything else. Okay. VSDH, we're only focusing on memberships and recurring revenue, because when you have a one-time revenue, you're going to get a multiple of 1, maximum 2 for valuation. When you have an ongoing revenue and membership, you're looking at the multiple of 7, 8, 10, sometimes 20, depending what you're offering. So all the divisions under VSDH except the VSH, they're all going to be based on the membership and ongoing. So the Roman model that you mentioned, exactly that's what it is. But the difference is right now, if somebody goes for hair loss, then after they get the prescription, they're going to get a membership that every 3 months we send them the products.
Okay, so basically, in case anybody doesn't, so essentially, I see Roman advertising like every 2 minutes on on ESPN or whatever. Like it's what is it? It's for prescriptions of I don't know, Viagra, hair stuff. So I could use both. I could use send me the 100 pack of the Viagra or the hair stuff. And I'll be good. So I'm gonna sign up. So it's a great business model. What is Roman? I think they're going public now, right?
Yeah, I think they're going public. They just did a raise, if I don't make mistake, for $200 million based on $1.5 billion valuation.
Okay, and what kind of revenues are they doing? What kind of traction do they have in the market?
I think the revenue is about 200 million or 150, and I don't know if that's projected or actual revenue that they have. But you get a huge multiple for that. So like again, Hydrate by itself, that right now, if under on track to do 5 million revenue this year. If you get a 20 times multiple for that company by itself, I'm not talking about any other division under Victory Square Digital Health, that by itself should be about 100 million valuation. So that's how we look at it. We want to make sure we have different brands for B2B and B2C in the digital health, because that's one of the industries that we feel is going to last long, because now that they're just starting and we were behind in digital health for a very long time. Right. Now that COVID pushed it for people to adopt all these changes, and we feel that's going to be an industry that is going to be a long-term, hot sector for investments and having different companies in it.
Okay, I think also one of the key points that I think is important. So you have this opportunity. They're going to do 5 million plus. And this is without the prescription stuff, right? This the recurring. Okay, and Shafin, the CEO, the CEO of Victory Square, his background was in online consumer marketing, right? So this is something where he has the expertise in scaling up this type of business.
So there are two points. You're absolutely right. So we're good in generating online traffics, and one of the reasons that we're trying to have a targeted group like discrete care, mental health, vets, and rather than having one big website is because it's easier to bring the traffic. Your customer acquisition cost is lower, your lifetime value is higher for those. And we can focus on finding other businesses to roll up under each and bring it underneath. Now that's one side. The other side of it is we already have an ecosystem of different portfolio companies that they all have a similar personas, customers and leads that we can send them from them into this. So from the online dating websites to different crowd that they do, like that's pretty much like how we create our ecosystem. If you look at how the gaming and online gambling is working together, this is kind of like an ecosystem that is going to help our companies to have multiple offerings for the same crowd of customers, or they can share the same customers for different companies.
Okay. Yes. I think it's whenever we talk about sort of new venture stage companies, it's important to know that the management, the people behind it have a track record, have a successful track record in scaling similar businesses, so that this is something where, let's say, I could see this like this health prescription business. I mean, this is something that you could easily scale to, based on Shafin's experience. I mean, he could do 25 million in sales in a year. I mean, he could hit that.
That's exactly the way that we're
in 18 months. I think he could hit that.
So the way that we look at this is, Shafin it has a very solid background and knowledge, and the team around him on online, marketing. And again, the record track talks itself. We don't have to get into the details. And the rest of the team, we have a team like myself and a few other advisors that we have. We've been on the revenue side for member management businesses and SaaS, software as a service side. That we have advisors that they used to be the VP of sales for Adobe or NetSuite, and that's how the bread and butter for these companies. And that's the vision that we have for these companies, that not only we're going to focus on B2C, but also is going to be a B2B version that all the medical clinics, they can have their own side online business. All the pharmacies, they can have their own. They can have nurse practitioners that we can send that. Now because of that, we also has started some conversation on partnerships. Like one of the partnership that really makes us excited through our digital health is with BC Diabetes. BC Diabetes, they're one of Dr. Tom Elliott is one of the most well-known doctors when it gets to diabetes, and they have some wearables that at any given time, check the blood sugar and tell live to the customers, no matter where they are, that hey, they need to have insulins, they need to eat food, and we're working on that to have a similar model with BC Diabetes as well under the VS Digital Health. So it's pretty much, again, it's supportive of our model to have a recurring revenue for this and growing it under different brands, and each brand is going to focus on their own audience.
Okay. Vaid, I just realized we didn't talk about, this is the first time you're on the program. We had Shafin, he talked about himself. Tell the audience about, your background, like how, your background, how you got involved with Victory Square.
So my background, has always mostly been in sales, marketing, and revenue. And I launched my first. We all do some side hustles since when we were young, and sometimes you want to share the story, sometimes you don't. And so I'm gonna talk about the part that I'm willing to share the stories. So I had since early 20, I started my first company and focusing again on marketing for dentists. Had an exit there. Then I started working with another software company that they were focusing on membership management businesses like yoga, martial arts. During the time that I was partnering in that company, the company had about like 5x ARR revenue growth, and there was an exit in that business for about 80 million year and a half ago. And then been working with different startups on the sales and the scalability. For me, it's just a scalability, like how we can get the quickest way to be scalable. CAC and LTV, we can get the low hanging fruit and then work on untouched markets and untapped markets based on what you're selling. Now, the way that I joined Shafin, one of the people that I mentored in sales, Shafin also mentored. We met over coffee, and I really don't know what happened after that. I've started working on some of the businesses on the growth side of it, and then we kind of became partner in crime in VSD for 4 years, and been focusing on finding the good value businesses and how we can add those to our ecosystem and grow them in a way that is just gonna it's not a usual extra like a 2x or 3x, how we can expedite that to get to 10 or 20x in 2 or 3 years on all those businesses.
Okay. No, it's very interesting. Okay, let's get to some audience questions. Okay. Do you need FDA approval on any of these businesses for the digital health side?
So anything that the test related side, if we want to have our own, get a white label, we're passing everything to the Victory Square Health. That it's being handled by those people. Under the Hydrate side, under the pharmacy, we're going to start selling our own test, and also we're going to open it to other people that if they want to bring it in to do that. So right now, our main focus under VS Digital is focusing on all these brands that is going to have a recurring revenue, while the VS Victory Square Health is just focusing on testing and selling tests and all that. And a quick note on that, on the Victory Square Health, we acquired this business early 2020 for $4 million. And business was valuated in Q3 2020 for roughly about 65 million worth of the business that we own 20% of that. And there was different factors for that. One of the factors were the potential and projection sales that they're gonna have from their offerings. And in Q4, based on Q4 and Q1 2021. So having enough sales in the Victory Square Health is going to validate that evaluation, which is like a 65 to 70 million valuation for that specific brand of us. And what I can tell shareholders, we're on track to the same valuation, if not higher, for Q4 2020 and Q1 2021.
Okay. Oh, one thing I forgot is, okay, so the Hydrate acquisition, yeah. So I completely dropped the ball in the announcement. So Hydrate, which is the digital health deal we announced. What's the terms of the acquisition? It seems very, very reasonable. What do you pay, like $1 million and change for this, basically?
So it's two-part. We're paying 1.6 million US in VSD stock over a course of 2.5 years, and then there's an earnout based on the milestones that we set for the management team that we're going to pay over a course of 2.5 years or 2 years, around that, as well as the VSD stock as well. Again, one of the things that we're good at it because of our network of partners and accelerator programs and other partners in the market and our advisors, we try to find the assets that is undervalued. And the way that we look at it is how we can add value to them by our skill set, network, other customers, to have a huge impact on the valuation of those companies right away. So yeah, the terms is now is 100% owned by Victory Square. We're gonna have it under Victory Square Digital Health, and we're gonna divide it in two parts. One, Hydrate as a business as they're doing today. We're gonna continue doing that, supporting them to hit the numbers. Two, we're gonna use their technology to white label for other brands that we have. And also we're going to offer the technology and processing to other vendors out there that they need to have such technology.
Okay, so this, I mean, potentially, I think there's kind of like you have a path to, turn this into, $100 million valuation, just that business alone, which you paid for a couple $1 million for, essentially.
It's a forward-looking statement, and again, based on what is out there in the market right now, based on the projection. If 5 million by end of this year, again, between 4 to 5 million by end of this year, that already is 100 million because you get 20 times of the projected revenue on Hydrate by itself, with no tech, with nothing else, just the business if that money comes in, which on the December and January, they were on track for that. That by itself is 100 million. Like, from the market perspective, if you want to do a financing or take it public.
Okay, so let's see. Okay, so let's get into some audience questions. So I think this kind of is validate. I think this transaction, this kind of adds validation to kind of the Victory Square investment thesis, essentially. Being able to create value, and again, we've seen Fans Unite, your spinoff, which has been a massive success so far, and Fans is just getting started. They're not even in they're like still. It's not a full-size unicorn. It's like a teenage unicorn right now. It's not. So there's big ups. Okay, so let's get to some questions here. At what point are we going to start hearing from the portfolio companies directly? Well, you've heard from Fans, right? That's one of them so far. Who else can we hear from? Could we hear from some of your guys?
That's actually a very good point and a good suggestion. And originally I wanted to have Shane, who's the CEO and the founder of Hydrate, to be on this interview as well, but was last minute. However, from next week, what we're trying to do, either Shafin or myself, we kind of team up with the CEO of the companies, the portfolio companies, that our audience can actually connect with them, see them, talk to them. These are the subject matter experts. So I think the next one that we're just planning to do is around Game On V2. That it's in the next company going public. A lot of great announcement is going to come out in next 10 days to 2 weeks. That in the next interview is going to be either Shafin or myself. We're going to do it with Matt Bailey, which is the CEO of the company. But it's a great suggestion, and we definitely want to do that.
Okay, great. I think that's gonna. I think once you start doing that, people will really understand like the big picture. Because I think right now they kind of don't. I think the market right now doesn't understand like what's inside Victory Square, basically.
I agree with you. Now I have to say it's the feedback that we're getting from the market is huge, and our shareholders has been amazing. Like in especially in last 6 or 7 months with their feedback. Like even in the last interview that Shafin had with you, we had some takeaways like dividend and all that we're just we took it away and we started working with it right away on how would be the best approach for the market. Because again, at the end of the day, this should be an easier concept for people to understand in the market and to be able to invest in VSD and believe in VSD.
I think once you start bringing on these CEOs, like after you bring on like the first like half dozen, 4 or 5 guys, I think as you bring on, I think the stock will be $2 by then.
Yep. So the next one we're trying to have Matt Bailey to be on this interview around the Game On and the game, and then we're gonna do the same thing for Immersive and all the other portfolio companies.
Okay, so we got K Trader here. He's asking, Vahid, Shafin mentioned with share distribution of portfolio companies. Can you clarify your plans? I think you talked about possibly maybe doing a share dividend. Maybe what are the
So this conversation has been around for past few months for us, and last week when Shafin had an interview with you, and we through our IR team, we got many questions, feedback, suggestions from our shareholders. So we started working on that seriously, and yes, we're gonna have some updates around that. I would say in the next 2-3 weeks that we're gonna send out for how our shareholders gonna have kind of take advantage of any spin outs. If it's an acquisition, if it's a M&A, it's gonna be going public, all that. In next, I would say probably 2 weeks or 3 weeks, we're gonna have an announcement around that. We're just getting into the details for that.
Okay. Let's see here. Oh, so we have a super chat. $5 super chat. Cruncher says, can you provide us with an updated global COVID test sales volume? What happened to the demo test kits sent to Europe?
So that's a good question. So as I mentioned earlier, we passed all the selling tests into our VSH arm. It's going well, and as I said, the reflection of number of the cells that usually you're gonna get a multiple of 1. You're lucky if you get 2.5 because it's a one-time cell. You're getting that from the valuation that you see under the VSH. That if we can keep the valuation around this 60 to 80 million, that has a reflection of the sales that is happening, and yes, the test was sent to Europe, and I can tell you it went well, and the company has been selling and sending tests not only in Brazil but other areas in the world.
This is just but this COVID, that's like a infinitesimal part of your business.
That's just the Victory Square Health that they're doing that, and they take care of all the sales for that. And again, that reflects in their valuation that is coming. That we had the Q3 was based on the projections. Q4 and Q1 is going to be based on audited numbers, and the people can see it in their valuation. And if there's any spin out on the VSH, then obviously based on dividend, our shareholders are going to take advantage of that.
Okay. Yeah, I think look, this is. With this type of with the Victory Score model, I think it's important to focus on the big picture. Not this is not like one single portfolio company which might be 2% of your business. And so I guess what's okay. So what has been? I'll break this down into 2 questions. Maybe what has been the greatest revenue? This is the question. What has been the greatest revenue generator since January 1? Wait, I just noticed January 1. This is like 30 days. So, I was going to say, what's been the greatest success so far? Top, where have you made the most? I'm
going to answer both questions. I know January 1st is too soon. We haven't even I haven't seen the accounting for end of January for a company, but. Our model is not based on the revenue. Our model is based on the value, the net asset value for the companies and how that's going up. But what I can say is which of the companies they have the greatest revenue in January 21, which is the Hydrate, the VSH. They all have the revenues that are going. But greatest achievement for us is a few things, and again, you're going to hear more about them. One is I feel that the acquisition for Hydrate is a cornerstone for us for digital health, because it's going to help us with online pharmacy sales. It's going to help us with different brands. It's going to have the tech, and it already has a revenue. And also, the achievement that we have under Game On and V2, that again, we're going to have an announcement on that, from the putting a solid team together from the board and advisors, and being on track for listing, that is key. Immersive had the uncontained solution that we got a massive great response for that. Like Forbes featured us as one of the most promising AR/VR products, and that is going to be listed. So So those are some great achievements. Now, beside that, we have other portfolio companies, the Copilot Advisors. Their revenue has been like the fastest growing company, one of the fastest growing company in Canada. Fans Unite, it's public, everybody can see it. So I feel there has been a lot is happening under the VSD, and those are the achievements. We're very excited for 2021 and 2022 because all these companies that we invested at about a year and a half, 2 years ago is getting to the point that industry is now recognizing them because of the industry is getting hot and they all have a great portfolio underneath.
Yeah, I mean, like essentially during all the hot themes, we got a tough crowd today. A lot of tough questions here today coming in. So Alan is asking, what has been happening with the company that caused the stock to drop significantly since the high in 2017? What has changed to make the company more investable?
So that's a good question, Alan. So the company was heavily invested in blockchain in 2016 and 2017, early 2017, and there was a 15 to 17. There was a massive, when the crypto when banana.
I think Vi, you should also add that if you look at the chart, I mean, the stock ran up to those numbers.
Yeah, so that's exactly what I'm saying.
So look at the whole picture.
We were at the right industry, but we're limited in one industry, and it went up, and the industry was hot. We're doing great. Now, since 2017, we try to expand our investment in multiple different industries. So we get extra chance that they all gonna go up, and again, like we have the industries get hot, get matured, goes on up and down. But if you have enough seed in place that is in different industries, that's how the company is gonna go up, and it's gonna have more of that. So now we have blockchain, we have cybersecurity, we have SaaS model, we have digital health, we have gaming, AR, VR, insurance tech. So when you look at it right now, that's the safety net that we created, that they're all going to be exponential, is going to be added, and it's going to keep going up. But again, that's going to, based on, our planning, that's going to keep the company to continue going up and doesn't come down.
Okay, but so here's what I think is the takeaway, because I mean, like I like to look at these things in perspective, which is that, look, number one is it shows you the potential for the stock, that it ran from where it started where 50 cents before it ran to like 250, was it, or something like that?
It started from 35, 40 cents. It went to roughly about $3 or over.
Okay, so it was a 10 bagger. So basically, it was a 10 bagger. And then it's had like a long base, and now you're essentially getting in roughly, what is it, 60, 70 cents? What are the stock is right now?
I think it was about 72 to 75 was like yesterday. Again, I didn't check that.
Right. There's an old theory, which I'm a subscriber to. This theory is where it's that stocks tend to go back to where they once were. If they did it before, it makes it much easier for them to do it again. So I think that actually is a positive that creates a good possibility for the stock to get to $250, $3 very easily. The other thing I think you should add is also, look, you're in the Victory Square is in the venture capital space, right? You have 23 portfolio companies. The average VC expects that 70% of their portfolio companies will go bust. They'll go to zero. And 10%, 1 out of 10 is going to be the home run. They're not looking to make money on every deal. They're looking to make money on just 1 out of 10. If they do 1 out of 10, that's how these guys, make the big money. I mean, that's the whole model, is to make that home run on that 1 out of 10. So far you've had fans, which is it's starting. I mean, it's not even a mature phase, and you still. How many shares does Victory Square have right now?
Right now, I think VSD has around 10 to 12 million shares. That's roughly how many shares we have in fans.
12 million shares. The stock.
10 to 12 million, yeah.
Okay, so the stock is $1. I think fans could easily go to $250, $3 the next couple of months. So that by itself, is half the value. So there is a lot of there's a lot of like hidden gems inside of VST, which is I think the key concept. And I think like some people are focused on, I'm actually surprised. They're focused on like tiny little parts of the business which are not even relevant. It's like COVID test. Who cares about COVID test? I mean, whatever. Let's see. Okay, what in terms of you're going to be having what I'm interested in is what's coming up in terms of these the tech spin-offs, share dividends. What again? This is you're going to have news on this in the coming weeks.
Yeah, so we're having news. Obviously, there's going to be some announcement around different brands that is going to go around the Hydrate and some of the changes that we're making. As I said, the pharmacy online is live right now. People can go and basically not only download the app, but also you can use that. It's going to be a few different news is going to be around the Game On and V2 around the team that we're trying to get, and we already got from management team to board and public listing, financing and all that. Immersive is going to have some, and that's pretty much it. And obviously the share dividend that again that's one of our hot topics that we're going to have some announcement in very near future.
Okay, let's see. We got a couple questions about. I think there must be a bunch of buybacks. Okay, okay. Has the share buyback program been approved? And I think there was a couple of people asking, why haven't you bought back any shares yet? So what's going on with the buybacks?
So yeah, the buyback. The management team believes that right now we're heavily undervalued, and that program has been approved, and we're working with our team, IR team, and legal team to be more active on share buyback. So again, like there's many different projects that we're working on right now, and based on the priority, we focus on that. But I believe, focusing on how we take this company and show the valuation and create that valuation for investors based on all these portfolio companies in these hot sectors. That's our the main goal and the priority. And as you see, based on the acquisitions that we're doing, we just did another one on the asset that we did from Aspen, that we believe in in those areas we're going to see a massive growth in those. That's our primary goal right now.
Okay, so let's see here. We got let's see what other questions we have. We have a lot of people asking about this COVID. There's a lot of people focused on this COVID thing, which is the same COVID question. Like what's going on with the COVID testing? It's like what?
So let me answer that question.
People focused. I don't understand that. This is like.
Let me answer that question in a way. So. Right now, the COVID it brings, if we bring the revenue of the COVID into the VSD by itself or VSDH, is going to have a multiple of 1, maximum 2, because one-time pay and it's based on the timing, and it's not like it's based on the timing of that. Now, VSH is that we own 20% of this company. Whatever sales that they have is gonna reflect in their valuation, and the sales being over $1 million, 2 million, 3, 4, 5, whatever the million would that be, it's gonna show in the valuation, and the valuation, the Q3 valuation has been based on the projected sales in Q4 and Q1, which again our year-end financial is gonna go out, and we're on track for the same valuation, if not higher. So again, for the people that they're focusing on the COVID part, this is the answer, and this is simple math to figure out the numbers.
Okay, let's see here. What else we got here? Looks like a bunch of people asking about uplist. I mean, obviously you're going to uplist at some point when the price qualifies. I think it's probably a little bit too early to talk about uplisting here. Let's see. Okay. What about okay, so we're gonna have in the coming weeks, we're gonna have some of the portfolio companies on. This is the game plan.
Yeah.
We're gonna have kind of in terms of other news flow, what else can we expect? We're gonna see some news about whether you're gonna do a share dividend or what's gonna happen with the gaming
the game on is going to be some updates going out. Immersive, share dividend, Hydrate, on mental health, the hospitality ads ticker, all that is we're gonna, you're gonna see it in next few weeks. We're gonna have launch. As I said, like the entire plan that we have for VSDH, it's in the matter of like in 90 to 100 to 120 days, everything will be set up now. But within next 30 or 60 days, also is going to be other updates within that some of those brands is going to be launched sooner than later, and some of the the tech will be improved sooner than later.
Okay. Let's wrap up here. We got a couple people asking when is the Q4 financials? When is that coming out?
I think Q4 it should be in April. I can ask my accountant team, but I think the Q4 on track to be listed in April.
Okay. I guess this is a comment here. The COVID. I think what he's saying is that the COVID testing revenues is relatively short term. It's not the main story, which I would agree with. I'm like,
absolutely. So, and as I said, like the VSH has been the primary focus is generating new tests and selling tests, and which is going well. So the team is focusing on that, and again, we're happy with the results that we're getting from them.
Okay. Question about Aspen. What is Aspen doing?
So Aspen, currently we own about 20%, I believe, but we had an acquisition on some of the assets. So we that we see there's a huge market out there for expanding it and building on top of that. There was an article from Shafin in Forbes earlier last year that how the cybersecurity at home is, it's the next big thing. And the asset that we acquired from Aspen is focusing on two things. One, obviously, the crypto is going up, and I believe based on the amount of the money that has been printed by the governments, the value for the money keeps coming down. But because all the countries have done that, you don't really realize that between the one currency to the other currency. But what you see it is, something like a crypto that has no tie to any currency is gonna, maybe that doesn't go up. That's the value of the money is coming down. But you see the value there. So, the mining and the cybersecurity aspect that we acquired from Aspen, we have a plan for that to build on top of that and start marketing that.
Okay, excellent. Okay, Vaid. So on that note, let's kind of wrap up. I think the main idea is people need to really understand like what exactly because I think we see 3 or 4 people in the questions. They're focused on like they're focused on the trees and they're not seeing the whole forest. They're focused like not even on the tree. They're focused on like a tiny little sapling and not the massive forest, which is the Victory Square. So if you can explain what, in your opinion, and we'll close on this question, top 3 reasons why investors should consider Victory Square shares right now.
I believe we have the number of the portfolio companies that they are mature and they have a product, they have clients, they have a good team, and they're in the right market at the right time. It's like everyone is saying, I wish I would have invested in Google when the Google was not Google, or in Amazon when Amazon was not Amazon, or Facebook. So these are the companies that we potentially are going to be the big giant companies, and we have all that ready to go for the investors. And because of that, the company, the valuation is lower than what these companies is worth. And again, we use one of them as Hydrate. And again, so that's what I feel that gives more chance to the investors. They have multiple shots that we believe the shots, majority of them are in the goal, but they have the higher chance by having multiple shots by investing in one company was investing in others. Plus, when we're going to have more news on the dividend, they also might be also have the shareholders for some of these companies as a spin-out.
Fantastic. Okay. Vaid, on that note, I want to thank you, and I look forward to having you and Shafin back in the next few weeks, maybe with some of the portfolio companies and some more good news.
Thank you so much. I appreciate your time and everyone who's listening to us.
Thank you, Vaid. Okay. Let's get ready for our next presenter. Where is KABN? I'm waiting for David. Okay, so we may have a slight delay here right now. Let's see what's going on with David. I think while we're waiting for David, I think the idea is that Victory Square is not a COVID play. I think that's the takeaway. I don't know why some people are focused on a one area. Okay, so let me do this, guys. Hang on a second. I don't know where David is. I need to give him a call. I think we may have I think he may have gotten the timing mixed up. So hang on. I will be gone for 1 second. Okay, David is coming in. There was a link mix up. Okay, he's going to be in 1 second. Highlight of everybody's day. KABN, one of our big winners so far. Where's Todd? Todd is in the Caribbean. What's that island with the mushrooms? He's growing mushrooms right now. I think he's actually. I know he's been in the quarantine. He was in quarantine for 14 days. And I think my understanding is he's getting out like now, or he got out the other day. So I think he's meeting with the government people there to get their psychedelic deal going. Let's see here. Okay, so. Okay, so I'm going to entertain you while I'm waiting for David to log in. All right. Let's see. Should we pull up some charts? Digital identity is definitely getting traction right now. So I think we're going to wait to see what David has to say. Yeah, I'm in. Here we go. Okay, here's David. What's going on? Hang on 1 second.
There we go. You know, it's techno.
We're providing entertainment for people. This is live television here.
There you go. There you
go. Dave. Okay, so I just need. We're gonna get you the camera. We're gonna get you. I think I want to get it like at eye level. So.
Okay. Let me see. You want it just a little bit. Let me see.
Okay, so now you're looking up. So now we need to.
There. That's eye level.
No.
I'm looking at you.
Okay, no. Okay, so maybe tilt it down. So, yeah, I think right now it's the camera's above you. I just needed right there. Okay, okay, right there. Look, right there. That's it.
Good.
Don't go. Okay, all right. Okay. All right, everybody. Thank you for standing by. Dave, the good news is that people still here. They've been patient.
I'm sorry about that.
This is a popular stock. They've been waiting for like 7 minutes. And that's a lifetime on the internet. So, Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream for February 4th, 2021. We are back with KABN and David Lukacs, the CEO. David, welcome back.
Thanks, Jack. Thanks for having me here. Sorry for the technical difficulties. I just couldn't get the link to work.
It's fine. It's fine. We have somebody saying that they were adding shares while.
Well, that's always a good thing. If they're waiting for me and adding shares, that's a great thing.
So everything is looking good. David, I think, you know what I'd like to do? I'd like to do something different because we have some people who know the story, some people who are might be new tuning in. But yeah, I kind of want to start. I want to kind of mix things up a little bit because everything has been off today so far. So I'll start backwards. Explain to us what's going to make KABN. What's the pathway for KABN to be a $3 to $5 stock? Can it get there in, let's say, 12 to 18 months? And what would be the path to get there?
Well, I always have to start, Jack, by saying everyone has to do their own due diligence. Otherwise, our counsel would kill me. But we believe it can and it should. And I'll tell you why. And if you've been following the news lately, there's so much information on these COVID passes and digital identity and everything going on. And here's the real kicker of what we do. I think it's really interesting and easy to explain it. You know, if you go to a concert, if you go to a theme park, if you go to an event, you wear a wristband. We all get wristbands. But imagine everywhere you go in life, if you're digitally going anywhere or need to present something, you have a wristband. So your wristbands could go way up your arm, down the other arm. What KABN and Liquid Avatar does is it simplifies that process. We are in the business of helping people manage their digital identity. We're taking all those digital identities and making it easy to use, easy to manage, and it's free of charge to the consumer. So we have a huge opportunity because our market is 100% of people online. So we're making digital identity easier to use, manageable, verifiable, and we're putting that control in the hands of the user. So we believe that that can rocket up our value.
Okay, and so you're in the market of digital identity. So exactly how big is the opportunity? Like, I mean, what is it? It's everybody. How are you going to monetize this basically?
Well, that's a great point. Well, if you think about it, and I come from the days of early internet days when everyone said no one would shop online, and we know what a misnomer that is. You know, the richest man in the world is sort of in the shopping business, right? Online shopping. So the addressable market for digital identity is everyone online. Think about search, the value of search engines. Think about the value of communications online. Think about the value of browsers online. They reach 100% of the market. Digital identity reaches 100% of the addressable market. That's a 5 billion person market. Now, we don't believe we'll have it all, but we're looking to try and grab a nice slice of the pie. And so how we monetize is very simply, we give our services to consumers at no cost. We think the consumer needs to be empowered. The consumer needs to manage this. And in return, we will bring the consumers values and propositions like offers that are permission-based inside our app. And if they take advantage of that, we get paid a bounty or commission. But what's really unique about all this, Jack, is that our users, because they're verified with digital identity, are real people and known. So marketers are now reaching real people, not fakes or bots, and losing a huge percentage when they go to social media or other places where they're just reaching a wide audience. They don't know how many people are real, or in fact, do they meet their demographic or geographic needs?
Okay, so clearly, you know, the two things. One is you're going after a multi-billion-dollar opportunity, huge market. Absolutely. But let's talk today, really, the traction you're getting in the markets. I think that's the thing that's really interesting for investors. Like, you've been gaining more and more traction in the market. You have the new deal you announced, a new partnership with Indico. You have the app that's going to be launching next, I don't know, 14 days, 2 weeks from now, basically, right?
Yeah.
Okay, so let's talk about traction, because that is important for people to know. Like, what, you know, like, when is this dream going to become real? Basically, this potential for, you know, the $1 billion opportunity here.
Well, rubber hits the road starting in 2 weeks for us. You know, we've been building all our products, making sure they're ready for market, testing them, and we start the rollout in the app stores in 2 weeks from now. We've already got our pre-launch marketing programs in place. We're getting ready to get out there and launch, and we have lots of partnerships emerging, some already in place that will help us reach users. Our goal is to, very quickly to get up into a significant amount of users, and significant numbers vary from user base to user base. But we think of it very simply, Jack, that a user can be worth, in relative terms, a verified user based on industry standards can be worth on a lifetime value up to $300 for us, we think, on average. So it doesn't take a rocket scientist to do the math. If we had 1 million users, would that translate to an enterprise value of $300 million? With 100 million shares outstanding, that's a $3 share. Now, that's all potential. That's all forward-looking, of course. But we look at numbers based on enterprise value of users, potential opportunity. And again, even in North America, there's 400 million people that could be our market size. We don't think it's that challenging. But it is hard. But we don't think it's that challenging to reach 1 million users.
I mean, essentially, so you've had experience in the kind of consumer marketing space, gaming for this type of area. Okay. So let's talk about the this Indico partnership that was just announced. So what is this about?
It's actually in DCO. It sounds like Indico, but it's actually in DCO.
This is the point of doing these interviews. That way you could, people that don't know me. So in DCO, what is in DCO? What are you doing with them?
Well, in DCO, and again, I don't want to get too technical here, but in DCO, we decided that, there's two things you can do. You can rent computers, you can buy computers, right? In terms of, we now are used to cloud storage. We decided that rather than let anybody else control our wallet ecosystem for identity, we would build our own. And that would give us a leg up because, again, we could give it to the consumer at no cost. There are other players in the market that may have to download cost to users. We decided to build it ourselves. And we've got some of the top engineers in the industry who have been in the identity industry for a number of years already, building our wallet and our platform.
Okay. And so the app is going to be in 2 weeks. Is there something that people could see now? Is there like any kind of, I don't know, beta, or is there some sort of screenshots? Or what can we get like right now to see? You have any?
Well, next week we plan on doing some sneak previews.
Okay.
So people can come out and see it. And again, I want to caution everyone that we're going to be launching in phases. We like to say that Liquid Avatar is sort of the peanut butter of the digital identity space, which is a big pill, right? It's something new and hard to swallow. So we're going to launch in a series of phases, and the reason we're going to do that is because we want people to understand phase 1, then at phase 2, and it's all about gamification, engagement, retention. So we've got a lot of great things planned for the next few months, actually.
Okay. Let's see if we have any audience questions coming in. Okay. Any guys, you have any questions? We got, I guess.
Wow.
Okay. No question. I don't know what's going on here. Okay. Here's what I think is interesting, though. So essentially, everything you've been talking about, I mean, for the last 2 months has been leading up into this really to this app launch, right? And what I find interesting is that a lot of times stocks have a big run up right before this news that's expected, and then when the news is expected, there's the old saying, buy the rumor, sell the news. Whereas the better way to do it is when the stock is low before the news comes out, that gives you the run up. So I think it's interesting because KABN right now is actually it's just a little bit above where we started back. When did we launch? In December, I think it was.
Yeah,
December.
in December, yeah.
So it had doubled like in a day. Then everybody was like, oh, crazy. Oh, I missed out. We missed the boat. So this is usually it's actually, I think this is a very auspicious. Actually, this is a very auspicious because usually it works the other way. But when people kind of give up on something right before the launch, that is when the thing actually works. So then they have to start chasing it.
Well, I can comment, Jack. We not only did we do a financing, but we had warrants coming due between January and February. So at that time, we did get some warrant cashes, which is going to put a little bit of pressure on the stock. But that's quickly coming to an end this cycle, and we believe that we haven't started the good news really yet. Once we launch and we're able to report numbers and show people what we're doing and showcase the product, and they'll see it all over the web and all over the app stores. I mean, we believe, this is a great opportunity to buy a bit on the dip.
Okay, so it's interesting. Okay, so really the story is really going to start. I mean, the story stock story. I'm talking about from my perspective is really once you launch, once you start getting to I guess to answer Basvaraj's question, he's asking when do you expect to have close to 1 million users? I think as after the launch, we're going to see, I guess, news reports how often to show what kind of traction you're gaining, right?
Yeah, I think we'd like to do them at minimum bi-weekly. I think or at least twice a month, and our it's easy to predict and talk about when we think we'll have 1 million users. Our goal, again, this is a speculative goal. Of course, our goal is in the first year to have upwards of 2 million users, but we've already got access to groups that have 10, 20, 30, 40, 50, 60 million users. So we could be low on our predictions, or we could be overstating, but we really are confident that we can achieve our goals.
David, I personally, I like a story when people have given up on it, like, or when they've, when something has had hype, and then everybody, like, people sometimes they buy in, like, they buy the rumor, they buy in, everything runs up, and then they're like, they expect the results instantly. They expect it just because they bought the stock. Now it's going to be a 10 bagger that week. when it doesn't work out, they will dump, and 3 months later, the stock builds a base and then it runs. So that is actually, we're in a good position. Here's a great question: how much cash on hand? Do you have enough cash to get to where you need to go?
Yes, I mean, we raised $4.15 million, so we did have some trade payables on the books, but we had no convertible debt or any other items on the book. So we end the year in a very favorable position in going into January and February. So we're cashed up, ready to go. We've been receiving offers to look at additional capital, and we're sort of standing pat right now. We've brought on eToro for the U.S. to look at we've got Mackie Research in Canada, which have been fantastic to us. And then we've got eToro in the U.S., and we're looking at U.S. opportunities as well. But right now for us, and you're right, Jack, everybody thinks that, you raise your capital and then bang, everything is done. And we had a launch cycle already planned. That's why we raised the capital in December. So for us, people who have been sitting by patiently waiting, they've been waiting for Liquid Avatar to come out, and we've now put a stake in the ground, and we'll have regular updates and regular opportunities. And we, like anything else, we believe, we're confident that everything will go perfectly, but, there will be some bumps in the road, as there is with everything, and we're being honest, but we have an opportunity to really take a large slice of the pie of a market that is massive and become, have some first mover advantages here.
Okay, we got some great questions coming in.
Sure.
Joseph was asking again, how will you advertise Liquid Avatar? How are you going to get users?
Well, we've hired one of the premier app marketing agencies in the U.S. to support us, and we start our pre-launch work actually tomorrow. And so they're going to make sure we're ranked and rated properly in the App Store, and that we've got opportunities to reach interested users. We've also got the campus agency that we're on a call with this morning that markets to over 2,000 universities, alumni, and families in the U.S. We've got other opportunities. We've got our communications firm and our PR in California, and we've got a lot of people we've known through the industries over the last 20 odd years that are excited to see Liquid Avatar become a success story.
Okay. Cole is asking, what is the incentive to the user to join the application?
Well, first of all, if the big incentive is, do I want to protect and manage my own digital identity? I mean, think about it. That's the first one. But we are adding all kinds of rewards and questing and gamification. We're working on some really cool AR projects to come out in the spring. And I think there'll be a lot of opportunities and rewards. I mean, you know, you can create an avatar and instantly share it with your friends. Excuse me. So that's a major incentive. You've never been able to do that, and everybody can share their information, what they want, when they want, and with whom they want instantly, and it's all free of charge.
Okay, I think that's what he was asking. Like, what kind of, you know, gimmicks, for lack of a better word, are there going to be, like this AR thing? Like, what's going to get people?
Yeah,
like...
I want to save it for rainy day, but what I'm going to say is we're working on some AR events that you'll be able to create really cool videos that you can take to TikTok.
Okay.
So there's some really cool AR incentives that are coming out in the product.
Okay, that's interesting, because the TikTok, that's the thing that, I mean, that's the market that
Yep.
that you're after. Okay, let's see. George is asking, do you have any direct competitors in this space?
Well, George, that's a really good question. It's the industry is really built. If you go to trustoverip.org, and that's a great place for people to visit, you're going to see that KABN is on the steering committee, along with some other great companies like IBM, MasterCard, Aetna, USAA, LG, and Accenture, and the province of British Columbia. But there are some other companies that are in the identity space. But we're part of this organization, and we're all working collaboratively together to discuss opportunities. My Chief Business Development Officer, RJ Reeser, is the co-chair of one of the committees, and I'm a vice chair of the communication committee. So we're actually involved collaborating to create interoperable opportunities rather than competitive opportunities.
Okay. Bunch of questions coming in now. See, everybody's first, they were, you know, hiding,
a little shy, and now they're getting to it.
It took a while to show them. They were like, what's going on? All right. So Harold was asking, how many users are in beta right now, and are they generating revenue already?
No, the beta was to test some features and functions, and frankly, we closed off the beta in early December, and there was just under 1,000 people on the beta, because we moved from AWS onto the IBM cloud platform, and we've just finished that in late January. So, and it wasn't about generating revenue. If you want to look at some of our programs, you can go to KABN, cash with a K, KABNcash.com, and see our rewards and cashback program. So that's live.
Okay, so Alex, you see the question, David?
Not all of it, sorry.
Okay, so he's asking, Alex is asking, I keep picturing the ability to scan your phone device at people, and then their AR avatar will pop up with creds. Is that in the works?
Well, that is really, Alex, that's very forward thinking. It's something that we are contemplating. You know, whether you're using your avatar or you want to use an actual picture of yourself, you'll be able to, you know, I would down the road be able to, you know, scan Jack, because I have Jack's picture in the system, and a halo could come around Jack, and then you'd see Jack's LinkedIn, Jack's phone number, Jack's email. Click on it, and then I can contact Jack that way.
It's pretty impressive. Kipper is asking, what is the monthly burn rate?
Again, we haven't posted our latest financials. We have enough runway right now for quite some time, so I can't comment on that. But we do have quite a bit of cash in the can right now to manage our burn for quite some time.
Okay. He's also asking, what about the DTC eligibility? That's you have eToro. What's
eToro?
eToro. They're working on that, right?
Yeah, we're in the midst of filing everything. We had to wait until all the financing was completed, but you know, when we took over, we did the reverse takeover. There was a gray listed symbol, TRWRF, and now we're working on upgrading it to full DTC eligibility.
Okay, Kipper is asking, with people getting vaccines and packing a piece of paper, can they upload that documentation with the app? I guess I guess
he's absolutely not.
A health pass.
Absolutely not. That piece of paper means nothing to us. What if you photocopied it or copied it? We're working on trusted electronic credentials that, if you think about it, if CF in the U.S. issued a credential to Jack, that was the one that we want on a trusted event. We're taking validated credentials that we can verify before uploading them.
Okay, so essentially, you're going to have a health passport. That you're going to have essentially.
Well, think of it this way: you're going to have 20 health passports.
Yeah.
You might have one piece from someone, one piece from someone else. But how do you manage those 20 different pieces of health information? Liquid Avatar gives you that capability to manage all of that, and we may have our own as well. So think of it as everywhere you go online and everything you touch digitally, you're going to have an ability to create a credential, and that could end up being thousands of credentials. The Liquid Avatar will allow you to manage and control those credentials.
Harold is asking, what about the 60 million DLI users? Do they have to create a Liquid Avatar to use the DLI platform, or is it just an option for them? And just what is DLI?
DLI is Disrupted Logic Inc. It's one of our partners. DLI is working with us to create an embedded registration system. We've gone through a couple different machinations in doing that. Users will have an option to create a Liquid Avatar, and we're also working with DLI to look at a one-pass system, so that you could have one sign-in or a single sign-in for hundreds of different games. So you wouldn't have to give your information every time you wanted to start a new game in the DLI universe. You just use your Liquid Avatar, and boom, you're in the game.
Okay, excellent. Okay, so it's actually, it's very interesting. So this is it's amazing, because this is like right now the company is at that inflection point right now. Well, we're going to know essentially whether this thing is real or not in a few weeks, basically, right? I mean, we're going to know if
it's real. I mean, I assure you it is real.
But when I say real, I'm talking about from an investor standpoint. You're like, hey, is this going to work or it's not? It's it's like essentially a binary bet in a way.
Well, I don't think so, because I'll tell you why. It took a while for online shopping to come into place. It took a while for Facebook to gain some traction. I think what happens is it's a momentum play.
Yeah,
what happens is, you start off, the curve starts off relatively flat, and then it just, accelerates.
I guess what I meant was they're actually gonna. I think they're actually gonna be able to see something, and it actually that's what. So in other words, right now, I think a lot of people they don't quite understand what you're doing, and then it's like one of these things. It's like it's almost like explaining social media, explaining Facebook. When I first heard about Facebook, and by the way, I don't even use Facebook, but when I first heard about it, I was like, I don't really understand. Like, why would I want to? But I'm wrong.
Let me answer that.
Who use it, right?
Facebook came out of 23, went down to 16, and I apologize, I don't know where it is today, but it's significantly higher. Right.
And that's the thing. So, but when did it start going up? Is when everybody kind of like said, okay, they went on to the next thing. They went into, I don't know, whatever. They went into MySpace, whatever the stock was when it was $16. But okay, so right now in about 2 weeks, we're gonna see the app. So that is, I think, a major catalyst for the stock right now. Is we're actually at that the moment of truth here, and then we could start seeing the traction. I think that's the takeaway. Again, for the investor side, okay, the product is out, and then we can actually monitor traction, and that'll impact the value of the stock and everything else. So then everything is going to become, tangible at that point. It's right now it's abstract, and then it becomes reality. So that's.
Well, I think you're right, Jack. But you've also got to look at the team's historical platform. You mentioned MySpace. We were actually the stalking horse. My team was the stalking horse for MySpace. We actually lost it to Justin Timberlake. So we understand social media. We've built social media platforms in the past. We've built, technologies around e-commerce. We've built artificial intelligence and machine learning technologies. We've been one of our senior people was early days with eBay. So at the end of the day, here's the situation. I want to be absolutely clear about this. If you believe that digital identity is the next big space, or one of the next big spaces, and that it is an addressable market that is massive, do you want to, look at companies or our company where we're entering that space on a large scale? So I look at it is this is the calm before the storm, right? And we're ready to move.
Yeah, I think we're talking about the same thing. Okay, so basically the catalyst right now is you get the launch. To wrap up, I mean, again, I guess this kind of just recaps everything. Is in your opinion, and we kind of talked about it before, but right now, top 3 reasons why investors should consider KABN.
So let's look at addressable market first. Okay, how big is the market space? And it's an unsaturated market space. It's an untapped market space. It's 100% of people online. 2, does the management team, which we do, have the experience and successes in the past to make this happen? And 3, do we have the technology and the partners to make this happen? And I think we have the team, the technology and resources, and we have the addressable market that makes us, a triple threat.
Okay. David, on that note, I want to thank you, and I want to see this app in 2 weeks. We're going to have you back.
Absolutely.
It'll be the thing everybody's been waiting for the last few months. So again, thank you everybody for joining us on today's live stream, and we'll see you all on the next one.
Thank you, Jack.